Sweat equity, building a great world-class business, or owning a job. That's what this week's First Word video is all about. I'm John Bowen, CEO of CEG Worldwide, and this week what I'd like to share with you some tremendous experience I've had on both sides of the equation of creating real value. And I got to tell you, all too often, I see so many financial advisors who are capable of building some great equity value, not doing it. See, we are in an excellent business as we serve our clients well and scale up to serve our clients well. The tremendous value we create is huge. Doing well by others. I mean, it's a great business. But sweat equity is not enough. We've got to have that entrepreneur mindset. We've got to have that business owner mindset versus owning a job. Well, how do we do that? Well, there's a balancing act that we have to do. We have to get really clear on what we want to accomplish. What are our goals? And a big part of that is really understanding the vision of what we want to achieve. Is it important? I mean, we divide businesses in our coaching program into two different types. One is a lifestyle boutique. And in a lifestyle boutique, what you do is you build your business around the lifestyle that you want. You don't have to build a great big business. And in financial services, clearly you don't. But you have to choose that model and execute well. On the other hand, some of us are wired differently and we want to build enterprises. And we build larger scaled operations. There's no right or wrong, but you want to have clarity of that so that you can balance it out. Now, there are 4 C's that we see that need to be addressed as the primary drivers of value. These 4 C's start with cash flow. And when I talk about cash flow, this is one that's near and dear to all our hearts. I mean, this is a driver of success. And you've got to be careful because it's so easy to kid yourself as you're growing your business that it's not as important to have cash flow at this point in time. I mean, we can invest it back in. Well, I got to tell you that stuff happens. You know the bumper sticker. Stuff happens. And it happens both good and bad. On the good side, you might all of a sudden find an opportunity to buy a business where, boy, if you had the cash flow, you would do that. Second, you might have the opportunity to be acquired that you didn't expect. You weren't shopping, but it was a perfect merger partner or an acquisition. And then on the other hand, on the bad side, maybe you have a downturn in the market. And you've got to weather a pretty big storm. Think of 2008, 2009. What do? We owe it to our clients, to our teammates, to maintain those margins. Cash flow, and this is the biggest driver. Having been involved on both sides of the equation, buying and selling, I can tell you this is the first thing. I've been involved directly where I was a principal or part of the team buying in 28 transactions and then as a consultant to probably over 100. Wow. Cash flow counts. So we want to manage our business as if valuation was critical at every point in time. Second is clients. And when we talk about clients, this balancing act is a big deal because as we start our business, we so often pretty much focus on anybody who's willing to work with us. But the higher the quality of clients, the more we're able to move up market and serve them well, the more value you're going to create. It's not the number of clients, it's the quality of the clients and the relationships you have. From there, we have the company, and this is really your teammates. And if I were to talk about the most important part of the teammates, of any business, is the team around you. I've had the privilege of having a number of businesses throughout my whole professional career, and I can tell you, when you have a super team, and we're blessed here at CEG, we do, boy, you are privileged. It's able to really create some amazing things together and really make a difference in your client's life. But you're going to be judged on value of who's there now, their longevity, the relationships, the skill sets, the expertise, the how we work collectively from a collaboration, and whether they're really enrolled in that vision and goals that you have. And then lastly, the competitors. How do you differentiate yourself from the competitors? I mean, this is one that if you can differentiate yourself, and one of the things, if you've watched many of my First Word videos, is one of the best ways is delivering wealth management. 94% of the financial advisors don't do that. They're investment centric. This is a real opportunity to deliver some great experience to differentiate yourself and command a much higher premium. Now, what are some of the other big drivers? Well, the keys to success that we see in maximizing your equity, let's go through them quickly. Number one is the business model, and there's all kinds of business models. We can look at more the investment side as a financial advisor, or we could have the wealth management. I can tell you that in our studies, the difference is huge. Wealth managers on average make 3 times more income, net income. They have almost 2/3 less clients and double the assets. Building a great quality of life, forgetting value for a second, great quality of life is important to you. This is really good. So business model, make sure you have a business model that's going to generate that value. Client profile, who are the ideal clients? Who are you focused on? Your primary focus. You want to be working and be very clear on that. Doesn't mean that you exclude others, but they should be complementary. Revenue, is it commission? Is it fee? Is it retainer? I can tell you the ongoing fee revenue tied to an asset base that's consistent is tremendously valuable in today's market. Do you have strategic alliance partners who are supporting you? Maybe in the business model, maybe in the client development. So critical. Technology. When we talk about technology, we all think about portfolio investment management, but also your CRM, the ability to deliver this great world-class experience, and also to support your marketing automation. Particularly if you have scale, that's very important. You have to have the operational systems to make sure that your clients get the world-class experience systemically. What's the relationships that you have? How deep are they? And this deep, we're talking about supporting them beyond just a portion of their investments. This whole wealth management really maximizes that value. Pricing. Are you the low price, a premium price? That's going to make a big difference. And it's going to create some real value for you the more that you can deliver value and not be a low price. Market niche. Do you have a commanding presence in one part of the market? Again, tremendous opportunity. Brand equity. Are you known in your market? Are you known? And it's not your name being known. Is it the experience that you're delivering? Is that known and that people who want that seek you out? Are you checking off all these? Network of contacts, the relationships that you're bringing together to be able to build this great business. Location. Most companies are not bought by a consolidator. They're bought by people within 50 miles. Are you in a marketplace that is going to maximize that value if you have some choice on that? And then lastly, practice size. Be really clear whether you're going to be a lifestyle boutique, because lifestyle boutiques have significant value. Enterprises can have a higher multiple, but oftentimes more partners and so on. So, the trade-offs on both. What do you want? Because what we have is we have this huge opportunity to build tremendous equity by serving our clients well, by delivering that great world-class experience. Or we can get caught up in the day-to-day and just do our job. Let's do a great job and make a difference with our clients so we build a substantial wealth management business. Wishing you all the best of success.